PDVSA, which is Venezuela's government oil company, ought to be rolling in cash. It's a big exporter, reserves are huge, and the oil price is high. But the company's so short of cash, it just said this week it's going to be paying suppliers with IOUs, essentially giving them debt instead of money. What's going on, Raul?
Well, this is essentially another step in another example of PDVSA's problems of late. The company at the end of last year owed suppliers around $12 billion in debt. That was 80% up from the past 2 years.
Right.
And
so where's the cash going?
The cash is essentially going to finance Chavez's political spending plans and social spending, which keeps him popular.
And he's trying to get re-elected in October exactly 7th, a month's time.
Which means that this year is crucial for him. So he is conceivably spending more than normal, which explains why PDVSA is having a cash crunch at this point.
So he's raiding PDVSA, putting it in social funds and all the rest.
He has been for years, and this has meant less investment for the company.
Right.
And in this particular case, this year, even partners, which usually do not lend money, are lending money. Chevron just lent PDVSA $2 billion. So, I mean, you can see that a lot of things that were not normal, even for Venezuela, are starting to happen.
Right, so is this something that changes after the election? PDVSA has a lot of internationally traded debt, right? There's a point at which the market will say no more. So might the company get back into some sort of better state once Chavez, assuming he gets re-elected?
What we've seen in the past is that there are delays with suppliers, not to this extent. So conceivably, suppliers will get the bonds, resell them in the market, and get at least a portion of what they're owed, and it might take them a little bit longer to get some of that money back sometime next year or the year after. But what we can expect to see is less investment in the company going forward, just because Chavez is
which makes it harder to make cash flow in the future. And then if the oil price comes down from $100 a barrel, which is pretty high.
That's the key factor. I mean, if you see a decline in oil prices, considerable decline in oil prices, this whole policy of jam tomorrow is just not going to hold for a while, for very long.
Okay, we'll leave it there. We'll be keeping an eye on PDVSA and Chavez's election prospects next month here at Breaking Views, and we'll have more for you tomorrow.